G'day guys, welcome to the Pumps on Property Show. Sorry man, I just threw you off. I know you were checking your mic.
I was like, is it on, is it off? I just changed my shirt.
The shirt looks fresh.
Yeah, I just got myself a couple of fresh AS shirts, something different.
I was dreaming last night and I was thinking about it this morning. I was just like, man, I haven't found a shirt outside of AS that I like the feel of in 10 years. And I'm like, I think I'm going to start a clothing company in the future because I cannot find what I want to wear. I can't find the material. I can't find the designs. I can see it in my head what I want, but it's just not in the market.
I tell you what, I ran into this guy at the Cotton Tree Markets the other day. Absolute legend. He was giving me a full map of where I need to go surfing when I go to Central America. I'm like, man, I'm not going to remember this shit. I won't be able to go for like 4 years. But he had these bamboo hemp shirts.
Mad.
They look so nice and they felt so good as well. But you'll definitely be doing the sustainable vibe.
Oh, without a doubt. Like there's some mad stuff out there and why hurt shit if you don't have to.
Yeah, exactly. Exactly.
I think next time I order AS, actually I've got to do the organic cotton tees for sure.
100%, yeah.
Yeah, today's video though, like Jesus, a bit of a sidetrack there. We just lost half of our audience.
It happens, but trust me, we're going to get stuck into it eventually. Today, talking a bit more about buying an above average property, because quality is everything to us, right? We're not just trying to, get average returns. We're not just trying to, do what feels comfortable to us. We're trying to figure out what is going to put us in the best possible position.
So where this comes from is actually noticing what my parents did. And I've talked about this before on camera, but
yeah,
they chose, I don't know how long ago it was. I think it was 96 to buy a really beautiful home on a beautiful block of land right on the bush in Engadine, which was South Sydney, about 32 k's from the city. Now at that time, they decided to go for the bigger home, the bigger block, the better street, the cul-de-sac street,
better pocket of the suburbs, surrounded by other owner-occupiers. And at the time, they paid about an extra 100k than they could have, gone for the smaller fibro home on stumps that was on a main road in the suburb. Now, in that suburb, which my friends are still buying and still living in today, that home, like mum's and dad's, is worth about 1.6 mil. Yep.
At the time, I think they paid 400k.
Yep.
The property that they could have bought for 300k at the same time is worth about 1.1 now.
Bit less,
maybe even less.
Yeah, one of my mates just went around. It's the same suburb, busiest street, 3-bed, 1-bath, fibro house on stumps, and he bought it for like 950.
Yeah.
And not a main road, but a busier road.
Busy road. So there you go. Like that gap of 100k can massively stretch. Now, looking statistically at the data, I know the things that we're going to explain that have worked historically to result in above average returns,
and that's all we have. Like, all we got is history to base our decisions off. We can't predict the future. We don't know what's going to come next, but you've got to try and make the most educated decision with the information that you have. And if the wheel ain't broken, don't fix it, right?
Completely, man. So I suppose some of the things that have worked is buying big cities or major regional markets.
And I think this is because these areas have the strongest population growth, the strongest infrastructure growth, and the strongest job growth. So I think let's just logically unpack that, right? It's like more people, more connected, more money.
Completely. It's more money and more people competing for that higher value site and space. So it's like if you've got a beautiful beachside town 6 hours away from Perth where no human lives,
they've got some nice minerals under the ground.
Yeah, there's nobody competing for that incredible location, which is just as valuable as Sydney or Melbourne or Brisbane, but it's just you don't have 2.5 million people or 5 million people competing for that site, and because it's a scarce resource, the price goes up over time.
And you were just talking about this in a previous podcast as well. It's like when you're going to resell, when you're going to purchase property, you've got to think about the demographics that you're appealing to in the future, because you want to appeal to the broadest possible range that you can. You want first home buyers, investors, mums and dads, downsizers, retirees. You want to appeal to a broader demographic of people because then you've got more people competing for that.
Absolutely,
if you're just focusing down the one path or focusing on the one asset class or the one demographic, then you're hindering your ability to get a higher price or get that emotion involved in the future.
I legitimately buy a property now for myself and then I renovate it for myself.
Yep.
And so it's like, I know what my taste is as someone with a few properties, a good business and a young family.
Yeah.
And that is quality. Like, people want something that looks good, that is safe, secure and feels right, walking distance to the things that matter. But historically speaking, and this is important, I think it was over the last 20 years up until about 2018, I think the data was from, or 19.
16.
Up till 16.
Yeah.
The RP data stuff around like...
Oh, no. Yeah, that was 19. Sorry. Yeah.
2019. So I think it was an 86% difference the metro markets in Australia had done over the regional parts of Australia. 86% difference over 20 years from putting 400k into this city versus 400k into this regional area on average. Now, if you look at the top 20 areas in Australia that have performed in the last 20 years, Byron Bays, etc., they're actually all the regional lifestyle destinations. But on average, if you've got 30,000 regional places to choose from or micro areas versus 7 capitals, it's much easier to just play the table and go for what's worked on average.
Yeah, and that's all we're trying to do here is trying to, buy an above average property. Like, that's exactly what we're trying to talk about here. So it's just, playing to your odds, like, rather than just rolling the dice and hoping for the best, which is what most investors do. It's like, okay, well, let's try and figure out how we can, avoid making a mistake, because I get scared shitless of the thought of a 30-year mortgage and hundreds of thousands, if not millions of dollars worth of debt. And I want to make sure that I've dotted the I's and crossed the T's to hopefully avoid becoming unstuck.
Completely, man. I love that. Like, as much as it's about the vision and the goal and where you want to be, it's also about, not building the house on sand, as they, have said for 2,000 years. The next one that we always like, and this is a preference thing for us. I think growing up in Sydney and then obviously living on the Sunshine Coast, cities and beaches is what's working. But, you take us out of the equation. The ABS expects 75% of Australia's job, population and infrastructure growth to be Sydney, Melbourne and Southeast Queensland focused. It's like, you don't have to be a rocket scientist to know that if 75% of Australia's capital and high-income earners are concentrated in a 2,000 kilometre area, that's where the highest values are going to be long-term as well.
And you look at the future infrastructure projects with the fast rails, the airport upgrades, like all of these things that are happening, it's all on this East Coast here to make those areas more connected as that population increases. And I think you were saying before, within the next 50 years, they want to get Australia to like 60 million people. If 75% of that is concentrating just on the East Coast here, it's gonna look pretty good.
It's a big thing. Like, it's going to look good for capital gains, and it's going to look like I'm probably going down northern New South Wales eventually. Trying to escape some of that.
Yeah, seriously, hey.
Nah, it's awesome. So, outside of that, I suppose some of the other things that we look at when, trying to buy an above average home is quality suburbs. Now, I've for a long time been talking about proximity to the city and quality suburbs as a huge indicator for performance, but we got some data recently from Jeremy Shepherd at DSR, which kind of, it's just not as clear as like A to B anymore. Yeah. So what he said is that suburbs closest to the city and the beaches in the CBDs, will generally perform at the start of a cycle better. But then over the course of 20 years, theoretically, a Manly Beach will get a very similar average annual performance as like a Liverpool in Sydney
And that's talking about the percentage as well. So it's important to understand that percentage is going to be the same, well, roughly the same over that 20-year period. And
that's important to note, man, because, if a 400k in Liverpool property is now worth 800, but $1 million home in Cronulla is worth $2 million, there's going to be a feeling that Cronulla's done better, even though percentage-wise it's an identical return.
Exactly. And I totally understand that there's the data there, but then I sort of think about like one of the reasons or one of the aspects that we focus on in terms of quality is like looking at the demographics in the area of a suburb that we're investing in. And if you to compare a Liverpool to a Manly Beach or something like that, it's, you know, there is a difference between the demographics that live in the area. There's bless you.
Sorry, I'm not sure if we're taking that out or keeping it in. I was like,
People
give me
sneeze.
10 seconds.
It's, you know, there's certainly a difference in the quality of the schools, in the incomes that those people are earning. And I guess, you know, for me, I feel more comfortable going closer to the beach or closer to the city with those more high quality demographics that potentially will pay a more emotional price, because that could skew the averages, because, you know, they might pay a crazy price just because they want to send their kids to the local school, or they want their kids to be involved with the local sports group or something.
I love that, man. And, you know, overlaying that new information, what I already know, I am still, based on demographics, going to make decisions on income earners, school districts, vacancy rates, and the percentages of owner-occupiers, because my gut says that even though averages over 20 years, over 7 capital cities and 30 regional markets look more linear than they would, individual properties and suburbs have very, very, very different stories if you were to break them all up individually. And that's why like a Byron Bay that's grown by 250% in 20 years versus a Cronulla Beach that over the same period of time hasn't done quite that amount.
Yeah.
They're different stories, because a Cronulla Beach is a Sydney-orientated story where people in Sydney that want that beachside, south side location will live. But Byron Bay is an international tourist destination story. And so you don't have 100,000 people in Sydney that can afford that Cronulla lifestyle. You've got an unlimited number of millionaires and global business people and global actors and singers that want a piece of that very limited pie that are going to pay anything for it.
Exactly.
Yeah.
Tough one to quantify, but important to take into consideration. And then obviously getting down to the suburb level, and this is what I think really matters. You know, like it's important to get into the right cities, the places that have the population growth, job growth, infrastructure growth, getting into those high quality pockets of those markets. But then I think once you get to the suburb level, that's where you start to get a hell of a lot different. Now, you know, we are only ever going to buy in quiet, family-friendly streets. You know, one of the things that I personally look at is like, if I had young kids under the age of 5, would I feel okay if they were playing out in the front yard? You know, because if there's a lot of traffic coming through, bus routes, a lot of people around, then hell no, I'm not going to feel comfortable with that. But if I'm in a nice, quiet, family-friendly street where I know all of the neighbours, or, you know, I know there's very limited cars coming through at certain times of the day, it's going to make me feel a hell of a lot better. And that's what your mums and dads are looking for. And that's the kind of demographic that you want to appeal to, because they are the emotional investors.
Absolutely, man.
Or buyers.
You know, on top of that, I think, you know, we talk about houses, and for a similar reason, that 2019 data point from RP, I think it was over a 25-year period, it was about a 95, 96% difference between houses and units.
Yeah.
Average performance Australia-wide.
Yeah, last 12 months, houses have doubled the performance of units as well. It's just important to recognise that the power's in the land. So there's only a certain amount of land available, and that's the scarce resource, not the building that's on top of it, because zoning changes, you can start to develop different things, and you know, anything can happen, but it's the land that's got the scarce resource, and it's the power is in the land. That's what's going to appreciate in value. So, you know, obviously buying a house is putting you in a position where you're controlling a larger portion of that land in comparison to a unit or a townhouse. So once again, logically, it just makes sense.
You know, I know for a while that developers and councils and state governments have been really trying to push this people don't want land thing, because the councils, state governments, Australian governments and the developers are being so fucking greedy, and it's so expensive to develop now because 60% of the cost of development goes back to the government as revenue. So they've effectively just chucked a 60% margin on what would be like a very affordable option for a lot of people. And so the only way the developers are able to do it now is to cut them into 200, 300, 400 square metre lots and just sardine pack these streets and not have on-street parking. And that is not the dream.
Yeah, ask yourself the question.
Absolutely not the dream. I've lived in it, in Batinia on the Sunshine Coast twice. It is not the dream, and any developer that's selling you that is kidding themselves. It is not what people want, and long term I think it's creating like major ghettos in Oz. And what people want is big blocks, big frontages, nice homes, big backyard space for the pool. And I think that is the future of Australian housing, not this micro housing that people are just constantly batting on about.
Yeah, and people get so blinded by the brand new. Oh, it's brand new suburb, brand new parks, brand new house.
I've been there and it was a great stepping stone, but it's not the place that you'd necessarily want to raise your kids forever.
Yeah, well, think about yourself. Like, if you had the choice to buy in one of these new tiny towns, or if you had a choice to buy in, you know, an existing established part of the suburb on a, you know, 600-700 square metre piece of land, yeah, the house might be a little bit older, but you can renovate it to what you would prefer. What are you going to choose? You know, I know 100% of the time I'm choosing the bigger land, the more existing established suburb, because more often than not, those existing suburbs are closer to the quality infrastructure as well, closer to the public transport options, the good schools, the shopping centres, whatever it may be, the major arterial roads even potentially. Like, because with these new tiny towns, the first thing to come is the houses, and then the infrastructure comes after that, because they need money in the area before they can actually put in some of that new infrastructure, where the established suburbs, they've been, you know, running well for a long time.
Completely, man. So I think, you know, there's some of the big rocks, and then, you know, some of the smaller things at the suburb level or the street level, the house level that we like is, you know, good open plan living, living dining kitchen, onto our frescoes, big backyards. We like good sized bedrooms. We like, you know, 1 to 2 bathrooms, but 2 bathrooms is really what most renters and most owners want. Long term, like a lot of my properties don't tick that box, but moving forward, I'll be more aware of that.
And I'm not too stressed on these things. Like, I think the big rocks are far more important. That's why we put a lot more a lot more emphasis, because, as I said, you can renovate, and a lot of these older homes have massive laundries that make it a little bit easier to convert a 3-in-1 into 3-in-2. And if you plan to invest like we do, which is holding properties for the longer term, or holding properties to add value to, then you're going to have to renovate them at some point in time anyway. So it's not the biggest issue, but if you are, you know, just getting started or just getting into your first property, then you ideally want a nice lower maintenance property, something that is a little bit more modern and a little bit fresh, because it's going to just make you get better tenants and less headaches in the beginning, because it is so annoying when you get that email or call from your property manager and it's like, you got to fix this again. And I'm like, oh, jeez.
Yeah, man, I feel that pain regularly. But, you know, that's a part of investing, I suppose. If you don't want any like maintenance pain, invest in stocks, but then you get market pain of like, you know, fluctuation and liquidity. So, you know, other things that I think are important that we haven't touched on outside of the demographic stuff and the really granular stuff is just quality streets. It's, you know, quiet's important, but, you know, if you can help it, maybe not backing onto like the busiest part of the school or the main drop-off part, you know, not directly across from some big sporting parks or, you know,
nearby
train lines, main roads, like just all of that key stuff, like power stations or big satellite things that people don't like whatever is going to turn you off from buying that area at the wealthiest part of your financial life, probably take that into consideration. Like when I was earning and just starting out and earning like 40 grand a year buying my first place, I wasn't in the position because I didn't have kids, I didn't have big money to think about this stuff. But now you can learn from that experience and go, well, look, I can't see it right now, but in 20 years time, you're going to be earning 4 times, 10 times more than what you are now. You're going to be a millionaire because of the acquisition you've done in property, and you're going to be so established, and you're going to have a family. Like, what does that future person want?
Yeah, and the reality is you've got to start somewhere, right? You know, like, unfortunately, most people getting started can't go out there and buy the premium blue chip property. So you do have to start somewhere. But then if you're starting somewhere, you know, maybe you do take a little bit of a sacrifice and, you know, you purchase 10 or 15 Ks from the beach or 20 or 30 Ks from the big city because that's all you can afford. But then when you get to the suburb level, ensuring that you've, you know, dotted the I's, crossed the T's, you've identified the right pocket of the suburb, the right street, you've got the right property, you're appealing to the better demographics, and just making sure that you can tick as many of these little pieces as possible to avoid making mistakes and hopefully kind of speed up the process to get into that next property, to get that extra capital growth and start buying properties in the high quality locations.
Completely. Now, one big trap that a lot of people, especially at the early stages of like property ones, the property maybe 3 or 5, fall into is just thinking that the middle price point or the median value of a suburb is an indicator that you want to be buying below, because everyone loves, especially when they're starting out, a winner, immediate capital growth. So I used to, like my second property, for example, I thought, yes, this is a great buy because I bought it for like 30 grand below the average price point in the suburb. But what I didn't double check was, you know, the house was filled with housing commission and major issues. You know, that particular pocket of the suburb was the lowest demographically. And so I, you know, thought that I'd ticked a winner. I'd made 10 or 20 grand on the way in and that was success. But in reality, I'd forgotten all of these things that we've talked about in this podcast today. And what I do now for properties that I'm going to hold long term that aren't absolutely cash flow or lifestyle orientated, because I do some stuff that we don't talk about on camera either. But for the properties that I'm going to hold long term, which are my great houses or my great houses and granny flats, I will not miss one of these things anymore. Like, it is absolutely essential to tick these boxes so that I can sleep comfortably and know I haven't cost myself that 1 or 2% per year by just being lazy on it, by not having a process to follow.
I think it's less being lazy and more trying to focus on short-term wins. Fully. And short-term wins is everything that early investors are looking for. They're looking for the government cash grabs, or they're looking for buying under market value, and you can get blinded by that short-term value. A lot of people do, but you know, thinking about the longer-term impact. Hey, if I go and spend an extra $50,000 in this suburb, it could put you in a such better position 10, 15 years down the line, like it did for mum and dad. So having a longer term outlook is so much more important and so beneficial to your journey to financial freedom, rather than trying to save $5, $10, $15, $20,000 on the way in.
You know, it's funny, like I was just thinking of a couple of the clients that we've had in the last few years, right? Now, I've seen, you know, many clients come through and buy incredibly good quality properties, and then I've seen some clients that have come through that were looking for that bargain. Now, some of these people that were looking to save themselves 10K, that we couldn't find that property because the market has been hot for a while, and so you are paying market value, or maybe you're buying something that's market value but with upside renovation potential to make it worth more in the future. But I've seen these clients decide that it wasn't the right time for them to buy because they couldn't find that little $10,000 on the way in or 20 grand on the way in, and the only way that they knew how to win was to them be the winner. Those same suburbs are now worth 150 to 300 grand more than they were. And it's like
the opportunity
that
cost,
ego associated with like, I want to win and I only win if I win, has now cost these people hundreds of thousands of dollars in a year or two period of time. And it's just like, it's insane. And I can relate to them because I used to invest like that.
Yeah.
But once you get a bigger picture like this and you start applying fundamentals, winning over 30 years by an extra 2% can be worth $1 million to you. And so it's like, win long term, like create a winning environment. Is you winning, the person selling winning, the agent winning, and getting what you want long term.
It's like, what's more important right now, me saving 10 to 20K or getting financially free? And it's like, I know what I'm going to choose 100% of the time again, because that's the way that we've developed our strategies, and that's the way that we think about investing. And we try and help all of our clients understand that it is the longer term play, that property is a marathon, not a sprint. And there is far more value in developing the right strategy, identifying the right market, suburbs and properties within those suburbs, and slowly but surely accumulating this portfolio to work towards where you want to be. Far more value in that than just going, well, hey, I've got a pre-approval right now and I need to get into the market within the next 3 months.
Completely, man. So, I know this is a little bit to take in, but if we strip it all back, metro markets, big regionals, houses with great land sizes in quiet streets, in quality suburbs, closer to the big regional markets or cities or the beaches within them, and then places that you would live in with your family at the highest income level that you're ever going to be at. And I think if you follow those rules, plus some of the others we talked about in previous eps, where we do go into market, we go into suburb, we go into the house level, you can really, really pick this stuff up in a couple of hours, write down a checklist that's going to work for you, and then strategically work through the market until you find the right place.
Definitely. It's helped me sleep a hell of a lot easier at night, and I'm sure it will for everybody else that's listening to this. So take your time when figuring out what it is that you want to do to make sure that you're focusing on the right thing, and then, in time, you'll reap the benefits, hopefully.
For those of you that would like to have a conversation with us, we do offer one-on-one strategy sessions over at www.pumkedonproperty.com. We'd love to offer you, or those of you thinking about buying this year, the chance to catch up with one of us, myself, Simon, or one of the team. We can talk about where you are, where you're looking to go longer term. We can deeply educate you on the market. And then, like we always say, take that information with a grain of salt, run with it and smash it yourself. Or maybe we can talk about how you can become one of the small number of people we work with each month. But either way, we wish the best for you, and we hope this content sticks. Please share it. Please subscribe. Please give us a review. And we just really appreciate being able to share what we've learned and what we love with you, so that you can make better decisions for yourself and your family in the future.
For sure. Thanks so much, guys. Oh, sweaty. So sweaty.